Ever wondered what the economic climate might look like in 2024? Are we past the peak of growth? As we gaze into the crystal ball of economics, it's clear that the heady days of unimpeded growth may be in our rearview mirror. The past decade has been characterized by a steady ascent, a rise fueled by technological advances and globalization. But as we move forward, this upward trajectory could begin to level out. This isn't to say that growth will cease entirely, far from it. However, the pace at which economies expand may slow down, a phenomenon often referred to as peak growth. This is a natural part of any economic cycle. After all, nothing can ascend indefinitely, and economies are no exception. A slowdown in growth doesn't necessarily mean a recession. Instead, it signals a shift towards more moderate and potentially more sustainable growth rates. But as we're discussing the future, let's not forget about the elephant in the room, the ongoing battle with inflation. It's a war that's been waged for decades, with central banks worldwide continually striving to maintain a delicate balance. Too much inflation can erode purchasing power, while too little can lead to economic stagnation. The battle is far from over, and in 2024 it's likely to remain a significant concern. Inflation is a tricky beast. It's influenced by numerous factors, from government spending to supply and demand dynamics, and even international trade. As we navigate through 2024, we'll need to keep a keen eye on these elements, understanding how they intertwine and impact the broader economic landscape. And this brings us to a crucial question, a question that invites your thoughts and insights. What do you think? Is peak growth really behind us? Leave your thoughts in the comments below. Let's create a conversation, a dialogue about the future, and see what insights we can glean from one another. After all, economics is not just about numbers and charts, but about people and their perspectives too. So don't be shy, share your thoughts, and let's navigate the economic landscape of 2024 together. Inflation, a word that often strikes fear in the heart of economists. Is the battle over or just beginning? Inflation, as many of us know, is the rate at which the general level of prices for goods and services is rising. It's a delicate dance, as we balance between economic growth and the potential erosion of purchasing power. When prices rise too quickly, your dollar today may not buy you the same amount tomorrow. Sounds a bit daunting, doesn't it? Well, here's the thing. Economists are saying that the inflation battle isn't over just yet. Even though we may have passed peak growth, the specter of inflation is still looming over us. Let's delve a little deeper into why that is. Inflation can be impacted by several factors, from supply and demand imbalances to changes in production costs. Recent disruptions in global supply chains have led to an increase in production costs, which in turn has driven up prices. Add to this a surge in demand as economies reopen post-pandemic, and you've got a recipe for inflation. Now, central banks typically use monetary policy tools like interest rates to keep inflation in check. The idea is to slow down economic activity enough to prevent prices from spiraling out of control, but not so much as to stall growth. It's a tricky balance to maintain, and is often likened to trying to thread a needle while riding a roller coaster. So why do economists believe the inflation battle isn't over? Simply put, the factors driving inflation aren't likely to disappear overnight. Supply chain disruptions are expected to persist into 2024, and pent-up consumer demand is still strong. Until these issues are resolved, the inflation battle will continue. Inflation is a complex issue with no one-size-fits-all solution. It requires a careful balance of economic policies and strategies to manage. It's a tough battle indeed, but remember, it's not the only economic challenge we face. Inflation battle is a tough one, isn't it? But it's not the only thing we should be worried about. Welcome to a world driven by supply. But what does that mean for our economy? Well, let's dive right in. A supply-driven world is a term used to describe an economic landscape where the availability of goods and services, or supply, plays a starring role in dictating economic trends. This is a shift from the traditional demand-driven models where consumer wants and needs are the primary drivers. In 2024, we're seeing this shift play out in real time. As global economies are still recovering from the shockwaves of the previous years, supply chains have become an unexpected protagonist in the economic narrative. From computer chips to toilet paper, the availability of goods has been disrupted, and this disruption reverberates through the economy in a multitude of ways. You see, in a supply-driven world, production hiccups can cause ripple effects that impact prices, employment rates, and even international relations. When supply chains falter, the production of goods slows down, This slowdown can result in increased prices as companies scramble to meet demand with limited resources. Consequently, consumers may have to dig deeper into their pockets to afford everyday items, but the implications stretch beyond the price tags. A disrupted supply chain can also lead to job losses, especially in industries heavily reliant on a smooth flow of materials and goods. This is because when production slows or halts, companies may have to cut down their workforce to stay afloat. Furthermore, a supply-driven world can exacerbate international tensions. As countries compete for limited resources, trade disputes can arise, potentially leading to a more fragmented global economy. So, why is this significant in 2024? Well, as we navigate this supply-driven world, understanding these dynamics becomes crucial. It helps us anticipate economic trends, policy decisions, and even investment opportunities. And here's a question for you. How have supply chain disruptions affected you personally? Have you noticed a hike in prices or perhaps a shortage of certain goods? Share your experiences in the comments below. Indeed, a supply-driven world presents its own set of challenges, but that's not all. Economic decoupling is also on the rise. With globalization, we've seen economies become more intertwined. But is the trend reversing? Is economic decoupling increasing? Let's dive in. Economic decoupling is the process where nations reduce their economic interdependence. It's like a couple deciding to have separate bank accounts. On one hand, they may lose the benefits of shared resources. On the other, they gain a certain level of independence and control. So, why is this happening? Well, it seems that the world is moving towards a state of self-reliance. There are increasing tensions in trade relations, technology competition, and even political ideologies. These factors are encouraging nations to seek economic sovereignty. It's like a game of chess where every player is trying to secure their king, or in this case, their economy. In 2024, this decoupling trend is becoming more apparent. Economies are focusing more on strengthening domestic industries and reducing reliance on foreign supply chains. It's like building your own vegetable garden instead of relying on the supermarket. But what does this mean for global economies? Well, it's a double-edged sword. On one side, economies could become more resilient to external shocks. Think about it. If you grow your own vegetables, a supermarket strike won't affect your salad plans. On the flip side, economic decoupling could lead to inefficiencies. Let's stick with the vegetable garden analogy. If everyone starts growing their own vegetables, what happens to the farmers? What about the supermarkets? And let's not forget the potential for trade wars and increased protectionism. So here's a question for you. Do you think economic decoupling is a positive or negative trend? And why? Share your thoughts in the comments below. In conclusion, economic decoupling is like a seesaw. It can bring balance, but also instability. It's crucial for economies to find the right balance between self-reliance and interdependence. Economic decoupling can have serious implications. And there's another trend we should watch out for: increased government spending. Government spending, a topic that always sparks debate. Are we going to see more of it in 2024? Let's dive into this. Economists predict an uptick in government spending in 2024, a trend driven by several factors. For starters, the global economy is still reeling from the effects of the pandemic. Governments worldwide are likely to ramp up spending to stimulate growth and mitigate the lingering effects of this crisis. And then there's the matter of infrastructure. Many economies are in dire need of a facelift, from roads and bridges to digital infrastructure. Governments are expected to loosen their purse strings to fund these critical projects. But government spending is a double-edged sword. While it can spur growth in the short term, it's not without its drawbacks. An increase in spending often leads to an increase in public debt, a burden that future generations may have to shoulder. And then there's the risk of inflation. Pumping more money into the economy can lead to price increases, impacting the cost of living for everyday folks. So, what are the potential benefits? Well, government spending can provide a much-needed boost to the economy, creating jobs and fostering innovation. It can also address societal issues like income inequality and climate change. From building affordable housing to investing in renewable energy, government spending can be a powerful tool for positive change. But it's also important to remember that not all spending is created equal. The impact of government spending largely depends on where the money is going. Investments in education, healthcare, and infrastructure tend to yield long-term benefits. On the flip side, spending on non-productive sectors may not have a lasting impact on the economy. So as we look to 2024, we can expect to see more government spending. But the key question is how this spending will be directed. Will it be a catalyst for sustainable growth and societal progress, or will it lead to higher debt and inflation? So, more government spending could be on the horizon, but the question remains, how will these trends shape the economy of 2024? Thank you for watching until the end. Your support truly means a great deal to us. If you have any questions or comments, feel free to share them in the comments section. Additionally, if you enjoyed the content, please give the video a thumbs up. Click the like button. This sends a signal to YouTube that there's interest in this video, helping it reach a wider audience. Don't forget to subscribe to our channel for more videos on the United States economy. Thanks once more, and stay tuned for more exciting content.